Another day of street riots in Greece deepened worries on Wall Street.
Does Europe, in fact, have the ability to take the tough medicine that it needs to take and get back on its feet economically to start to grow again?
The fear is that the Greek debt crisis could become contagious and create a domino effect among other weak European economies like Portugal, Spain, Ireland, and Italy, and ultimately undermine the global recovery.
A lot of people have been calling for a correction. You know, they never ring a bell, and you never know what the reason is, and it always happens for reasons you least expect.
And at 2:20 this afternoon, a sell-off suddenly turned into pure panic. The Dow, which was at 10,600, went over a cliff, plunging more than 600 points in less than 30 minutes. But almost as quickly, the fever broke. By 3 p.m., the markets had regained most of those losses.
Remember, we do a lot of computer trading down here, so that came in and just pushed the market right down.
Two stocks had terrifying falls. Procter & Gamble dropped from $62 a share to $39 in minutes. And Accenture, which started the day at $42 a share, collapsed to just a single penny before both recovered.
This is probably one of the scariest things that I've seen in the street in close to 30 years.
And according to reports, the panic may have been provoked by a trading error, by someone who simply pushed the wrong button.
It's bewildering, it's intimidating, it's frightening, and obviously something has to be done to make sure that this doesn't happen in the future. It's very, very unfortunate.
The panic has subsided for now, but the markets are still uneasy. The Dow has lost more than 600 points over the past 3 days. Katie?
And if the trading error theory turns out to be true, Anthony, how can someone do that, push the wrong button and start something like this?
Well, the story going around Wall Street today was that a trader at a major firm placed a sell order for 16 billion instead of 16 million. Now, when that happens, it can have a cascading effect, essentially triggering a series of computer sell-offs that can lead to what we saw today.
And I understand this is called a fat finger trade or something like this, but aren't there safeguards against something like this happening?
On the New York Stock Exchange, there are what they call circuit breakers for stocks. Those circuit breakers kicked in today, but the stocks can then be sold on other markets, which is what happened.
Anthony Mason. Anthony, thanks very much.